Hey everybody, good to be here. My name is Brent Moore. It's time for getting started with stock investing. I'm sitting in for Kevin Horner today. He's going to be the regular host of this class, but I am not. Hold on one quick sec here. Let me just mute that. But I'm subbing for Kevin today. I'm grateful to be here. I'm also joined by Mike Fairborn in the chat. So if you're interested, follow us on Twitter. X, it's now called, at BrentMooreCS, at Mike Fairborn CS. Good to see some familiar names in the chat. Today, I want to talk to you about growth investing. Okay, there's different ways of investing. Kevin last week went through, I didn't see the whole session, but I saw parts of it, went through kind of an overview of this class, this series. And, we'll go through that in just a second. Let me hit a few disclosures and we'll then get to the heart of the matter here. The information today is for general informational purposes only. It's not an individual recommendation or endorsement of any particular security, chart pattern, or investment strategy. And while we discuss technical analysis, other approaches, including fundamental analysis, may assert very different views. We will be talking about fundamental analysis today, as a matter of fact. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money application, we will look at that, is for educational purposes only. And payment of dividends is not guaranteed, and dividends may be discontinued. And all investment involves risk, including risk of loss. So, Kevin talked about the series. I'm not going to spend much time about this series overview, but you can see different topics we're going to cover in this series: growth and value stocks, technical analysis, entry signals, and so on. Today, I'm just going to hit the very first part of that, growth investing. And I want to show you it from the perspective of on the Schwab.com website and the Thinkorswim platform, but also generally what is growth investing. So let's do that. And I think that's what I wanted to say here. So here we go, growth investment style that focuses more on stock appreciation potential and less on intrinsic value. That would be value investing or dividends. So often we'll kind of put those as other opposite ends of the spectrum: growth investing and value investing. The reality is, though, it is a spectrum, and you don't have to go all to one or all to another, right? You could do some sort of a blend investment between these. But growth investing, we're looking for growth potential in that stock. Often it's going to come down to looking for earnings growth, because that's how we ultimately measure a company's success. In the most basic sense, is how much the company earns. Okay, so that's where the focus is going to be on growth investing. We'll talk about some nuances about that today. But really, whether we're talking about growth investing or value investing or income investing is another approach to investing. And you can see these all kind of on this slide right here. Any of these are more of kind of a fundamental approach to investing, as opposed to technical analysis. Technical analysis is generally generally, I'm making some assumptions here, but some overgeneralizations perhaps. Technical analysis, we're looking usually shorter term, timing. We can kind of mix these up a little bit. We can kind of use some technical analysis here, but the focus is going to be fundamental analysis. And when I say fundamental analysis, I mean looking at the financial data on the company itself. Okay. Now, if you have questions, feel free to type those in the chat. Between Mike and myself, we'll hit those up. Mike is an expert in this field here, and so between the two of us, we'll do our best to answer your questions. Okay. All right. So here's what I want to do. Let me just show you this right now. I'm going to go over to the Thinkorswim platform. I have a comparison graph here, and I think you can see this. The purple line, so there's different growth indexes, there's different value indexes, but this is the S&P 500 pure growth index. In other words, it's taking 500 stocks in the S&P 500, and it categorizes them as, the most value or the most growth. These are the most growth stocks here in that S&P 500. This purple line. Whereas this line down here, this kind of bluish, tealish line, is the value stocks. And you can see over the past year, growth stocks, this pure growth category, has been up 32% over the past year. The value stocks during that same time period, less than 10%. Okay, so huge difference over the past year. Now, what I don't want you to take out of this is the lesson that, oh, growth is always going to outperform value, or growth is going to outperform value over the next year, just like it did over the past year. No, that's not my point. My point is there's times when growth outperforms value, and the past year has been one of those times. And but there's also times when value outperforms growth. If I switch my time frame here, here's my time frame, new time frame. Over the last 5 years, again, growth has outperformed value, but you can see there's some time periods where that has changed. In early 2022, the gap narrowed there, didn't it, on that? So I don't want to belabor the point here on this chart or anything, but let me just do one more time frame. Let's do 3 months of time. 3 months of time, it's been pretty close, the performance between growth and value. But the focus today is going to be on growth. So what I want to do is I want to start on the Schwab.com website and just kind of talk about it a little bit here. So I'm going to bring up a symbol, okay? I'm going to bring up a symbol, one that you may have heard of before, Apple, okay? So here's Apple, and I just want to show you if you bring up the stock on Schwab.com, there's a lot of fundamental characteristics you can look at. Okay, I'm not going to go through all of them right now. You have your analyst ratings, third-party analyst ratings on the company. You have news. You have dividend information. Eva, in the chat, I know that you have a fondness for dividend investing. Well, there's dividend information. You can click on Show More for more information on these. So, in fact, Eva said the value stocks beat growth on dividends. They do, yeah. Very typically they do. Some growth stocks will pay dividends, okay, but generally, their growth stocks, that's not their strong suit. But that's not the purpose of the growth stock. But here's where I want to focus right now. When we're looking at growth stocks on Schwab.com, if you scroll down a little ways, you can see expected earnings. In other words, this is expected what's coming up for earnings, the next 4 quarters of earnings for this particular company, Apple. And so you can see what the expectations are. They're actually, earnings are kind of dropping a little bit expected over the next 3 quarters. Okay. And then they kind of pop up there. Now, is this going to come to fruition? I don't know. I really don't know. But that's what, these are just analysts that come up with this expectation on that. Okay. And you can see consensus estimates. And you can see next earnings into the month here. Okay. Now, we don't know this is going to come about, but it is looking at the future. This has already come about. This is historical earnings, and you can see what's happened. You can see what the estimate is and the actual, the estimate in the darker and the actual in the lighter. And you see we actually had some earnings beat here, but it hasn't been like steady growth or anything. So very often growth investors, what they like to see is they like to see that steady growth. They like to see it go up quarter after quarter or year after year, probably more importantly, year after year, but you can see the smaller trends in the quarter after quarter. One challenge with looking at earnings or growth rates in earnings or growth rates in sales or something else quarter by quarter is sometimes some stocks have some seasonality to them. In other words, just kind of every Q1, for example, they earn more, whereas every Q2, it tends to drop. So that's why looking year over year may be beneficial. You can see more if you click on Show More here. And I'm going to go here, and for some reason, it's not bringing anything up. Let me try that again. Show More. And it does not want to load. Let's try a different company, okay? Let's do Procter & Gamble, okay? Here's Procter & Gamble, and it is Is it going to load for me? This should load. Okay, well, I'll tell you what. This is not going to load here, okay? And I'll tell you how to get. Neelam says, well, how do we get to this? I'll show you how to get this page on the website. Now, you're going to have to take it on faith from me here, folks, today, because this is not loading. I don't know why this is not loading. I looked at it an hour ago and it was loading just fine. But for some reason right now it's not loading. But if you go to this page, some things you can see are, you can see historical growth rates in terms of earnings. Okay. As I already mentioned, earnings is kind of a key thing that we want to see growth out of for a growth investor. You can see sales or revenue, same thing. You can also see growth rates for cash flow. Okay? And those are kind of three key areas that many growth investors like to target in terms of what they do. Okay. All right. So earnings, sales, cash flow. All right. So that, and this isn't the last I'm going to mention those parameters here. We're going to hit those parameters up in just a little bit there. But just realize that's how you do that. Now, so let's go back here. Let me click on accounts, click on summary. Let me go back to research here. We're going to go to stocks, and I'll show you back how to get to this page. If you go to research and click on stocks, or basically any page, if you pull up a symbol, let's try Apple again. Here's Apple. You bring up the symbol, click on the name of that company there, and it will bring up this page. Now, how do we get to that page? You scroll down, you go to expected earnings, and where it says show more, click on show. There you go, it loaded. Randy was correct. Randy said just go out and come back in, and it worked. There we go. It worked. Now, what did I mention to you? I said you can look at both quarterly or annual. Here I'm looking at annual, and we can see over the past few years, 2022, 2023, 2024, what do growth investors like to see? They like to see those numbers going up, okay? All right, going right up there. So what about revenue? Well, we can see that we want to see revenue numbers going up, okay? What about cash flow? We like to see cash flow numbers going up. Okay? So you can see it went up and then it kind of tailed off a little bit here, year to year. Not a huge difference here, year to year on this. Revenue went down, went up, and this is kind of a estimate here. Estimated to go up a little. Not massive numbers here. When you're talking a few percent, that's not a huge difference. But hey, look, it's Apple. It's a big company. They're already bringing in a lot in terms of sales. Cash flow, same deal. You can also see kind of 5-year annualized growth rate, 15%. 5-year annualized growth rate in terms of sales, 8%. For cash flow, about 9%. So those are, I would say, solid numbers, but not spectacularly growthy numbers. But when you're already a $2 trillion market cap company, generally you don't get 30% growth rates like that. All right? Okay. So that's where you can see some additional information here in this company. And if you want to go back, click on this little guy right there, and you can go back to that main page there, and you can see the other information here. Now, let's move forward so we can get through the information that we want to go through today, because I want to show you how are we going to find some of these companies, these growth type companies here. Well, you can use the screener on Schwab.com. So go to research and click on stocks, okay? And then you can click on stock screener. Now, on this stock screener, you can go and there are growth companies here. There's small cap growth. Let me click on view more. You can see dividend growth companies. Okay? These are pre-built screens that you can look at to try and find some companies that you're interested in. I've saved some in the past. Notice, look, here's a growth screen that I've done that I saved, just earnings, sales, cash flow, growth. Okay. I'm going to show essentially the same screen here in just one sec. I'm just going to build it for you. But once you've created a screen, and if you want to follow along with me today and build the screen, great, wonderful. Then if you say, well, I kind of like that screen, then you save it, save the screen. I'll show you how to do that as well. And then after you've saved the screen, then you just don't have to recreate it each time, which is not what you want to have to do. You want to save yourself some time. Then you can just click on the screen and it'll pop up. But if we want to build our own screen, we can do that. So those are the pre-built screens. Let me just kind of go back here and just shrink this down. This is the page I was on. I went to Research Stock Screener. Click on that, and then you can just create your own screen here. All right. So let's do it. So what I'm going to do is I'm going to start off with just some basic criteria. These screeners, by the way, and this is more of a beginning level class, more of an entry level class. So some of you may know this already, but to use these screeners, you have the general categories here on the left, and you click on the little plus sign and it opens up all the available spots there within those categories. Basic, I'm going to click on this. And what I'm going to do is I'm just going to go to the index and I'm going to just narrow it down to the S&P 500. What we've done here is we've taken over 10,000 stocks. I think it's over 10,000, isn't it? What do we start off with? Index, does it tell us? It's not going to tell us right there, but narrows it down to 500 stocks right off the bat. And so these are going to be kind of larger cap companies by just throwing that index in there. And another thing you may want to do is you may want to throw in a sector or industry. So if you click on sectors and industries. Now, I'm not actually going to narrow it down right now. You can just click on which one you want it to be. If you just want to look in financial stocks, you just click on financials and you do that. I'm not going to do that, but I am going to leave that in there. That way, on the results page, when we see the final results of those stocks that come up that meet all these parameters, it'll tell us what those sectors are that are in, because it's important to be aware of the sectors you're investing in, folks, because you don't want, I can't tell you exactly what to do, but most people don't want a portfolio of stocks all in the same sector. They're more interested in some diversification there. And this is an easy way to just kind of double check that diversification. But here's what I want to do. There's a lot of categories here. I'm not going to go through them all. You can look through them at your convenience. Play around with it. That's really maybe the best way to learn this, is just to play with that. If you're looking for an income screen instead of a growth screen, click on dividends, right? Analyst ratings, if you care about analyst ratings, you can click there. That's these are third-party analysts. They're no guarantee. You can go to company performance. And here you can see the categories. Revenue growth history. Okay. Estimated revenue growth. EPS, so that's sales or revenue. Earnings per EPS, earnings per share growth history. And you can see projected estimated earnings per share growth. Remember, what I'm going to try and focus on here is I'm going to try and focus on things like earnings growth and revenue growth and maybe even cash flow as we're doing this. But I'm going to do this revenue growth history, and I'm going to go most recent. There's a lot of little acronyms here on this, okay? Most recent fiscal year versus prior fiscal year. So MRFY, most recent fiscal year. By the way, MRQ is most recent quarter. TTM is trailing 12 months, okay? But I'm not doing those. I'm doing this one. And when I click on that, it brings it up right here. I'm going to say, hey, I want a growth company. So I want something that's growing at more than at 15% per year or more. Do you remember when we were looking at Apple and we were saying, well, the growth was more in like that 10% range or something like that? And I said, that's not bad, but it's not super growth-ish either. Well, this is going to make it a little bit more growthish in terms of our sales growth. Now, we're going to do the same thing with earnings growth here, okay? Earnings growth history. And I'm going to do the same thing. Most recent fiscal year versus the prior year. I'm going to say at least 15%. And when I say at least 15%, notice these are each little categories. I can select 15 to 25%. If I select this one as well, I've got 25 to 50%. And this one as well, 50 to 100. There's not going to be that many probably, or greater than 100. So I've selected all four of these boxes. Basically, I'm excluding anything under 15% here. So you can select one of these, you can select multiple ones, or if these don't exactly fit the bill, you can enter in specific values there. And I may do that below, but right now I'm just going to make it, I want to create this here. So let's do that. Now, if we're growth investors, and we want this growth, we'd like to see a history of growth, proven history of growth, and we also like to see projected growth. Now, the projected growth, like I mentioned, may not come to fruition, but having projected growth is probably better than not having any projected growth, I would say. So we're looking historical and in the future. So that's what I'm going to do here. I'm going to go to estimated EPS growth, and I'm going to go for next year, and I'm going to click on next year, and I'm going to do the same thing. I'm just going to use 15% plus, okay? And let's just see what we got. We're down to 32 stocks here. That's still a pretty good list. I may add a little bit more to this. Now, these are all growth parameters. They all fit neatly in the whole growth category. There may be times when you add some parameters that aren't growth parameters on a growth screener. So for example, maybe you want to add in debt to equity. I don't want my company to have too much debt. Okay, so I'm going to click on debt to equity. Here we go. Now, this is one that I'll just tell you, if I'm doing a value screen, I often add in debt to equity. If I'm doing a income screen, I'll often add in debt to equity. If I'm doing a growth screen, I often add debt to equity. It's a impartial indicator. It doesn't matter. It doesn't matter whether we're growth or value or whatever. We want our company to have reasonable amounts of debt. Now, I don't love, I have to admit to you here, I don't love the categories they have here. They'd say less than 1, 1 to 2 to 2 to 3. I like to think about it in percentage terms, though. In terms of percentage, the 1 represents 100%. Okay? What does the 2 represent? The 2 represents 200%. Okay? And 3, 300%, and so on. Okay? So, this is the amount of debt divided by equity. Well, generally what I like to see is I like to see less debt than equity. Now, equity, debt is not well, it is a 4-letter word, isn't it? 4 letters, but it's not necessarily bad. Most companies take on debt financing to some extent or another, but we just don't want it to be out of control here. So what I'm going to say to you today is let's look for a debt to equity ratio of maybe about 40% or less. Well, how do I get 40%? I can't get it by using these pre-established categories here. So what I'm going to do is I'm going to click on enter specific values, and I'm going to say less than or equal to, I'm going to put in 0.4. That's going to equal 40%. Okay, and you can see that narrows it down. Basically, it cuts it, well, less than in half of those companies. We're taking the least debt ridden of those companies. We want companies that don't have that debt because we want them to be able to fund their future growth. It's all about growth here. Now, there's going to be one more here I want to do. I'm going to throw in cash flow per share. Cash flow per share here. Okay, and I don't need a lot, but I do want positive cash flow. So I'm just going to say 5 or higher on that. We're down to 8 companies here on this. Now, let's view the matches. I'm just going to click on view matches if I want. Now, by the way, if you want to save that screen, you can, okay? You can save that screen by clicking right down there, save screen. Click on view 8 matches here. And then once you click on save screen, it will ask you to name it, okay? So let me click on that. And here's our results. Do you recognize any companies here? Okay. Cincinnati Financial, maybe you've heard of it. First Solar, you've likely heard of it. Microsoft, you've definitely heard of that one. Micron, you've probably heard of that one. ServiceNow, yes. Tesla, you've heard of that one. Workday, yeah. A lot of these are companies that you've heard. But let's just take a look. I'm going to click on the symbol here. And here's Microsoft. And remember, you click on the symbol, it gives you this. You can kind of see a little info here. But click on the name of the company. It'll bring up all that data I showed you before. So let's just kind of do a quick look here at Microsoft and some of its characteristics. And, you know, that's it met the parameters of our growth screen. We'll just say that. I don't know where Microsoft's going in the future, but let's see if we can see kind of why it's come up here in this screen. By the way, a lot of traders do like to look at analyst ratings here. These are third parties, okay? They get it wrong. So these are not recommendations, but just realize if you want to look at the analyst recommendations, you can go to the ratings reports area right there, okay? Let's go and if you want, so here's the stock, okay? And you can see kind of technically how the stock's doing. Let me go to 6-month chart here. You can see, you know, ups and downs here. 1-year chart, you can see what we've done. It's gone up a little bit over the past year, down from 378, up from 378 to 425. And you can also see on that chart, you see those little E's and D's, they stand for dividends and earnings. So if you look right there, you can see, oh, there was a dividend, there was the earnings, there was a dividend. And we can go longer term, by the way, and you can see, if you wanted to, a progression and the dividend payment or what the earnings came in, okay? So there we go. That's the chart. Now, if you want more detailed chart, yes, you can do a full chart on that. Just click on Show More. It'll give you a chart. You can add indicators on there if you want, like moving averages and other stuff on there. But that's not the purpose of our session today. Dividends, it does pay a dividend. But again, that's not the purpose of our growth investing. The purpose of our growth investing is to find companies that are growing. Upcoming earnings estimates, it's showing increasing quarter by quarter estimates for Microsoft. Historical earnings, you can see increasing quarter by quarter results from Microsoft. Now, sometimes people will ask, how important is you get these earnings beats? Personally, it's not I don't think it's necessarily the most important thing there, but some traders like to see the earnings beats come out there. But realize companies will eventually miss an earnings, and that just happens on that. Okay. I would prefer to just see steady growth. Steady growth. Let's look here. Last 3 years, kind of a little jump here, and then a significant jump, 21% jump there on that. Okay, that's nice. Revenue or sales, nice jump there. You can see the 5-year annualized growth rate, 18% on earnings, 14% on sales, 16% on cash flow. So you can see with this growth here, including the projected growth, some of the reasons why this company, and it's a company you guys all know, came up in our screener on there. Now let me go back. Let me just click here. We're going to go back, and let me just show you another area you can find some information here. If you go to the peers and ratios comparison area, you can go right down here and you can compare your company. They have Microsoft, Oracle, Salesforce, Adobe into it, and you can compare your company in different areas to some of its peers, including areas such as growth rates. Remember, we like to see those growth rates if we're growth investors. Now you can still have a good growth rate and the company can still go down in price. Okay. So it's not a foolproof method, but it is. If you're trying to learn about growth investing, I want this to be a starting point for you. And just to give you the basics, that's my whole goal today here, is to go with the basics here. Now, I just showed you on the Schwab.com platform. I would encourage you to take some time to go through this, look at some of that information here. In general, what you like to see is year-to-year growth on these things. I guess not in the case of like debt. In the case of debt, you'd like to see it actually going down year to year. But, most things we like to see earnings, sales, cash flow. We want to see that growing. Now, I want to show you here on the Thinkorswim platform, just kind of switching, because you can do the same stuff, same sort of stuff on the Thinkorswim platform. So, for example, if I go to the Analyze tab, and let me just pull up the stock we were just looking at, Microsoft. Here's Microsoft. And remember, Microsoft is not a recommendation. This is just our example, but it's one that came up in our screener. Here's Microsoft, and you can read about it if you want to know more about Microsoft. But one kind of nice area here on this is, again, I'm on the Analyze tab, I'm on Fundamentals, is you can see year by year growth here. Okay, so 2020 on. So most probably important is the last couple years, but you can look back for a little more perspective on this. But when we look at things like earnings per share growth, cash flow per share growth, or free cash flow per share growth, sales per share growth, what we like to see is we like to see those numbers go up if we are growth investors. Okay? And for the most part, you can see they are. Okay? For the most part, in fact, we'll say for the most part, they are going up there. And that's a good thing. Now, every company has its little hiccups along the way, and that's fine. There's no perfect companies out there. But you can also see things like I mentioned, debt. We kind of don't want to see the debt going up. But one of the things is, and in this case, the debt's actually been going down over time. Remember, this is the most recent over here. And that's pretty nice. Very often with growing companies, you actually do see some debt going up. As long as it's not out of hand, it's not the end of the world there on that. But so you can see some of the same information on this Thinkorswim platform as you can on the Schwab.com website. Now, I mentioned before, often I'll look for earnings, sales, cash flow growth. Here's what I'm going to do. I'm going to bring up an old scan of mine, load scan query, and I just need to find it, growth in sales, earnings, cash flow. Okay, let me just run that scan. And okay, there's only 3 stocks coming up here. And well, we can look at them. Like here's Arista Networks, Marriott, NVIDIA. I think we hear enough about NVIDIA. I'm probably not going to look at that one today. Maybe we'll look at Marriott or something like that. But let me show you the guts of the scan here. Okay? Now, if you wanted to, you're welcome to copy these. If you're watching on a recording, you're welcome to, pause it and pull these down. I'll go through them here in just a minute. But if you are interested in this scan, I'll share it with you. But feel free to tweak it. Feel free to tweak the scan. And let me share that. If you're watching live, I'll throw that in the chat. Remember, the scans, scripts aren't guaranteed for accuracy or timing on those. But here's what I have on this. I'm looking in the S&P 500. I'm looking in the S&P 500. So remember, in addition to the filters, the way the filters work is you click on Add Filter here, and it gives you a choice of different filters. Here's a stock filter I added. Fundamental filter. These are mostly fundamental filters I've added there on that. Okay? But you can add them. But before you add any of those, you can choose up here. If you want to look at it just as a specific industry group or sector, you can do that right up here. If you just want to look in a particular index or something like the S&P 500, you can do that right up there. But when you want to add these filters, you just click on Add Filter, and it will, and then it asks you the type. And if I say, I want a fundamental filter, it adds that down there. And then I can choose what fundamental filter I want on there. And then it's going to ask me about some data with that. I'm going to get rid of that one because I didn't want to add that onto the list there. But here's what I have. I have stock, ask price, at least $15, basically, is what I did. That's almost every stock in the S&P 500 is probably $15 anyway. There's just a few that aren't, so that's not going to narrow it down that much. All right. Now, I added on fundamental filters. The next 5 are fundamental filters. Earnings per share TTM. There's more than one earnings per share, so you just got to be a little careful on that. If you go here, there is a just says earnings per share. They give you different choices on that. So here I have earnings per share TTM. Now, look, this is the main, you add the filter, in this case, fundamental filter, then you add the main category, and there is another one. There's another subcategory you can choose from. Here, you got to change it because there's a lot. If you just throw earnings per share TTM and try and get the same results, you're not going to. You're not going to get the same results. What you're going to do is, because you haven't changed it right here. You got to change it right here. Year over year percentage annual. I put 20% minimum growth rate in earnings here. Okay. Earnings per share average. Notice the difference. This one's earnings per share TTM, trailing 12 months. This is earnings per share, and this one I was able to select a 3-year average, 15% minimum. On these, you don't have to add in a maximum if you don't want to. I'm just leaving it open-ended. I don't care how high they go. I just want to cut them off in terms of how low they are. I want at least 20% earnings for the year, over the past year. I want at least 15% average over the past 3 years, okay? Sales per share, year over year. Again, I had to change it right here. If you just throw in sales per share, it's not going to give you the same results. You need to change it to year over year annual. 20% is what I have there on this one. Revenue, okay? 3-year average. You see what I did? The same thing with earnings that I did with sales and revenue here on this, okay? Minimum 15%. Free cash flow per share, year over year, annual. I had to change it here. It's not going to come up with the same results unless you change it there. I put in 20%. I'm just kind of did the same thing on all these. I want 20% growth rate. Now, 20% growth rate is pretty robust growth rate, but the whole purpose of this is we're looking for growth companies, growth companies, and not just 1 year's growth. I'm looking back over the past 3 years' growth here. And so now you can, if you take this, you can tweak it. I'm not trying to say this scan is the end all and be all of all scans here or anything like that. This is under the Stock Hacker, by the way. And there you go. That is, and David says that's 15%. Yes, that is 15%. That is 15% growth rate, okay? I don't know what they should, for consistency, put the percentage right there, but that is but they don't. So I'm not sure why. Okay. Now let's go and let me just wrap this up with let's look at Marriott. How about, okay, and see how this came up. Let's go to Analyze tab. Let's, instead of Microsoft, let's look at Marriott. Okay, you can see Marriott stock price has really done well. Okay, you can read all about Marriott, and we can look at that growth rate here on this. And 2024, they don't have data here on 2024. They have 2023 data. And this, whether you have this last column, kind of depends on when their fiscal year ends, to be honest. But what we want to see is growth. Now, keep in mind, Marriott, hotel vacations, what happened in 2020, COVID, probably not surprising that 2020 is going to stink. In fact, what I would say is 2020, we probably don't even need to bother looking at it, to be honest, at this point, because that was such an anomalous year. I don't know that that's really telling us anything about now. But what we do want to see is that growth rate. Here's our earnings per share growth rate. Okay? Here's our cash flow growth rate. Here's our sales per share growth. That's high growth that we're seeing here. Okay, and it's obviously not going to continue at this growth rate forever, but you can see that. Growth investors often also like to see things like profit margins. Ideally, profit margins are going up. Debt, again, we don't want debt to be going out of control. It's gone up a little bit there, so we'll see. And that's one value that some people find in analyst reports, is you can kind of get a little color commentary, so to speak. Even if you don't accept their, and I don't want you to blindly accept buy, hold, sell ratings from them or target prices or anything, but getting some color commentary may not be a bad thing. Again, they're third-party analysts there. By the way, you can also look at like valuation metrics here, okay? Here's your PE ratio, current versus 5-year average is pretty high. Current's not super low, but again, it's a growth company. We're not shooting for a PE less than 20 necessarily on terms of our PE. Okay? All right, folks. I think that's it. Let me just see if there's any questions. Thank you, Mike, for helping me out in the chat there. Is stocks recommended before trading? I guess I'm not following your question. There's 90s limit. Stock. We have different courses, and I encourage you to continue with this Getting Started with Stock Investing course. I think this is a good introduction to investing. Kevin's the normal instructor here on this class. Okay, so what did we try and do today? Just to recap, I tried to tell you what growth investing is, what we focus on in growth investing. And primarily, we focus on earnings, sales, cash flow type growth, probably most emphasis on earnings growth, both historical growth and potential future growth. That's the goal of it. I showed you where you can see some of this relevant data on the Schwab.com website and how you can screen for it on the Schwab.com website. I showed you where you can find some of this relevant data on the Thinkorswim desktop platform and where you can screen for it on the Thinkorswim desktop platform. That's my goal here, everybody, today. Hopefully you found it helpful. Coming up next, we have After Hours Trading. And thank you, Mike, for helping me out in the chat. Make sure you subscribe to the YouTube channel. Trader Talks, Schwab Trader Talks is the YouTube channel. And everybody, hope you all have a wonderful rest of your day. Bye-bye, everybody.